Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently, kind of what we think is likely to happen next, and what's going on with the data in the background. This is a must know if you're not familiar with kind of the on-chain metrics with what is going on, what the macro direction of Bitcoin looks like, and just kind of focusing too much maybe on the smaller time frames. In this video, we're going to focus more on the longer time horizons and what's going on with the kind of some players of Bitcoin in the space, right? So yeah, this is one that if you're not familiar with, you're going to want to pay attention to. As I get into the video, if you find it useful, informative, maybe even entertaining at times, smash that like button. I do appreciate that. If you're new to the channel, make sure you subscribe, stay up to date with all the videos that we do. Above and beyond those two things though, guys, make sure you join us in Discord, a centralized hub of everything that we do at Cheeky Crypto. It's the first place we go to notify you of the ins and the outs of everything crypto. So check it out, linked in the description below. It's completely free, and I don't think you'll be disappointed by what you find down there. Okay, so this particular chart here is our hourly chart on Binance, and we are paired up with a USDT. Now, as you can kind of see, following on from our video yesterday, we came just ever so slightly higher than our higher expectation yesterday. So we drew these two yellow boxes on for our fifth wave expectations, specifically all around, what was going on with the Fed, the interest rates, etc., right? And a lot of stuff was priced in way ahead of time, and obviously on the announcement we saw the massive dump to the downside. Now, obviously I did short this market, it's all around here, and yeah, I think some of our community did reasonably well out of this one. We'd only took a quick flip on this one, so I think I booked about 10% on the movement, but nonetheless, it's a good kind of way to kind of see how the market was reaching an end of structure, and we were going to see some kind of retracement. So that was a really good movement for the traders out there. But essentially, what we have here is a completed 5-wave movement, and there's lots of different ways of looking at Bitcoin on this particular time frame. Now, what I'm going to do is I'm going to focus just on this smaller time frame for a second, and then I'm going to jump on over into the on-chain metrics, and then what I'll do is I'll move over into the macro view. Okay, so let's just quickly refresh our memories on where everything sits here with the structure for Bitcoin. Okay, so I think we are, we're in some kind of B wave movement. We have gone up a little bit higher here. Okay, so it's a big A wave from the top of 21.5 down into those lows, which actually would now be over here. And yeah, we are in this kind of B wave movement before we drop down even lower. Okay, now we've moved up a little bit higher than we were over here on the 10th of November. That's fine. It does to me look like a big ABC 335, but could also be determined maybe as a double zigzag. Lots of different ways. One of the things I'm pretty confident on though is that we are not trending. Okay, so what I mean by that is we are not in some single 5-wave movement like this. Instead, I think we are at best, if we really wanted to try to make something fit, in a double zigzag pattern. And a double zigzag pattern is a series of mini trends like this, okay? And it's actually 4 of them in total, okay? And it would look like this. This is just me doing a really neat version of it, or trying to do a neat version of it. And inside here, we'd have these kind of corrective moves that just pull us back down, and then we rally back up again, and then in the middle you end up with this kind of structure. This is a double zigzag, but essentially what it would be is an A, B, C, and an A wave, an A, B, C, and a B wave, and then an A, B, C, and a C wave, and you end up with this kind of corrective structure. This is probably at best what's actually going on over this side here, but I much prefer to look at it as a 335 because we did have a pretty rapid movement towards the end. That being said, I don't think we're trending, so it is what it is. We haven't got the perfect structure for a trend, so I do think that we still have to move on down. Now, going down into these low areas, it's not something that you're going to see in a straight line. It could take time. Time in the market is going to be incredibly difficult. We don't necessarily think that's what's going on here. But on this micro movement, I am still expecting further downside. And if we come into this, so we got rejected from this high area here, we can see that we've moved down into this low point. It's possible that this is the existing low, or we've yet to have this B wave movement before we go down even further. So, potentially we are looking at something maybe that comes up a little bit there's a lot of resistance right up here as well, guys, about 17,900 approximately. And then we come back down into the previous supply area to see if we turn it into demand. And all of that could then potentially over a period of time be wrapped up into a bigger corrective play that might even take us back down to this previous area of demand, which we almost went back down to but managed to avoid, and so forth. So I'm not looking at this thinking to myself that this is a really bullish structure or anything like that. I do think that we've come to an end of a structure here, and we are likely to see more room to the downside overall. So essentially on these smaller time frames, so you can kind of see that we are moving down quite a bit right now. It's not bullish, it's relatively bearish, and we see from time and time again big money not necessarily participating in these movements to the upside. A lot of retail is, but not big money. So let's go ahead and talk about the on-chain metrics, right? So the on-chain metrics here for BTC is showing us with 11.77 million going onto the exchanges in 2022 and 12.33 million coming off the exchanges in 2022. We can see that we have cooled off a little bit. We've started to see a little bit more on the way of outflows off the exchanges on these 30-day average bars. And you can see here another significant decrease in the amount of Bitcoin on the exchanges. Again, this comes down to the basics of exchanges cannot be trusted right now, and it's safer to be self-custodying, if that's such a word, your own cryptocurrency, which is why you see a huge surge with things like Ledger hardware wallets, of which, guys, we are affiliated with. And if you are not on cold storage or have a hardware wallet, and then check out Ledger, linked in the description down below. It does support the channel. We do get a small kickback if you do happen to purchase from Ledger, but there are other brands available, so do your own research, as we always say. One of the things I would say, though, make sure you get a hardware wallet directly from the manufacturer. Do not buy it from eBay, do not buy it from Amazon. Unfortunately, there are a lot of fake ones out there, hacked devices, when we have seen a few people lose their cryptocurrency. If the exchanges aren't catching you out, we have unfortunately seen some of these fake wallets and scammers actually scamming people who thought that they were doing the right thing by buying a hardware wallet, but unfortunately didn't buy it directly from the manufacturer. So without scaring people too much, just make sure that you buy yours directly from the manufacturer and have that peace of mind. As you can see, the hodl waves here, we look for day-on-day changes. Everything's looking pretty okay, aging well, nothing too much there. When we take a look at the inflows and the outflows, we did see that huge surge of outflows, people withdrawing from the exchanges again. I mean, it has come right the way back down recently. So yesterday we saw 44,000 coming off the exchanges, whereas 37,000 BTC goes on to the exchanges. So essentially, you know, nothing too much there. Now, when we start taking a look at the the wallet counts, right, we'd take a look at the shrimps, the dolphins, the sharks, the whales, and the krakens, 5 different wallet sizes. We see different demographics behaving differently depending on, you know, whether they are retail investors with 1 Bitcoin, all the way through to high net worth individuals of 10 Bitcoin, all the way up to institutional level players. So essentially here, what we're seeing is a little bit of a cooling off period between the dolphins and the shrimps, as that price moved up a little bit. And as we come over into the larger size wallets, you see that the traders really bid back the move big time, right? And this is 100 Bitcoin or more. Now, these guys are very aggressive. This is why I called these guys the sharks, right? They're aggressive in terms of following the price action. They basically are, in my opinion, trading it aggressively. So the fact that they've moved up like this, it's interesting, but I do not believe that they are going to remain this bullish on it. I think they'll turn and we'll start to see these wallets decreasing. In terms of everyone else, we do see whales basically seeing this pump as exit liquidity, and they continue to dump on retail investors, as in there's always a buyer, there's always a seller. So when someone is buying, someone is selling, and it does appear that the whales and the krakens are the ones who have been selling during this recent pump to the upside. And basically, yeah, that never ends well. We see this time and time again. If we're following the money, big money is not flowing into Bitcoin. Instead, only small money from retail investors is flowing into Bitcoin. This is not suitable for sustained growth in terms of price action. So until big money is really coming in here, I don't think there's too much to get excited about. We talk about this all the time. Here is the Bitcoin whales pretty much during 2022, you have them spiking up in February, and ever since just dumping on retail investors looking for that liquidity, and they are finding it. Okay, so just kind of bear this in mind that they are trying to push the market in a particular direction. It's the same with the Kraken size wallet. They accumulate during the bear market to dump it on. This is what happened in 2018. Okay, for the Kraken size wallet, it accumulates during the bear market only to dump it on the market. And I say dump it lightly. What I mean is flood the system, flood the market with excess amounts of Bitcoin, because everything that moves price, there's only two things we should focus on: supply and demand. If supply increases dramatically, then price will drop. Okay, and if we see the supply shrinking, then what we tend to find is the price that moves upwards. Okay, obviously demand really enhances whether that price drops rapidly or whether that price surges rapidly. Okay, so supply and demand are absolutely everything. And when we start thinking about the different participants here, it's important that we reflect on what these bigger players are doing at these key points in time. Are they accumulating? Are they dumping and flooding the market with Bitcoin? And are they trying to drag the price down? But at the moment, we are still seeing far too much money flowing in from retail. So until that cools off, I'm not expecting anything major to occur here when it comes to BTC. Basically, those retail investors need to sell their Bitcoin to these whales before this bear market comes to an end. So let's jump down into our macro view here for BTC. Here we have Bitcoin on the daily chart, right? And there's a couple of key things we want to kind of focus in on. One, obviously, we broke this this previous all-time high from 2017. Okay, we broke it, and we've been trying to fight our way around this area. We obviously went down quite a bit from here. Are we going to test that as our support line around the 19,798 USDT, or are we just going to come down and look to test this next level of support, the major support level here at about 13,970, which actually is to the penny, and this one would be the one that I think is the likelihood. I think this is a good support level for us at 13,900. But if we were to happen to lose that, the next kind of one I could find that was of decent relevance is the 7,680 all the way down at the bottom here. So there's a few things that we have to be kind of cautious on. I'm not saying that we are going to go down to 7,680, but I do think there's a likelihood that we do go down to 13,970. Essentially, though, if big money does not want to come in, or more specifically, if retail investors are not selling here, then I think the whales are going to push the price down into these lower ranges to get that money away from the retail investor. So just be aware that essentially until those retail investors are selling their Bitcoin over to those whales, I'm not seeing a reversal in this. Now, from a technical standpoint, we still have the potential to reset and continue dropping down, right? There is lots of people who kind of get a little bit too carried away during moments like, let me find it. Let me use a trend line for this. Moments here, for example, where you're setting those higher highs and higher lows. Over here in June, higher highs and higher lows. People get tiny bit too carried away. We could see another one over here, for example, and we can see these resets, right? That's what these are. These are resets, and we can continue to do these resets and continue to go down until retail money will sell. Okay, so I don't know how long it's going to take. It could be 3 months, could be 6 months, could be 12 months. I don't know. But once that retail money has sold or is starting to sell their Bitcoin and into the retail, from the retail investor over to the whale investor, then we'll start to see potential reversals in the market. But until then, big money is not in here. And if big money is not in Bitcoin, then there is no incentive for big money to allow the price of Bitcoin to, push up too high. So just bear that in mind, right? Essentially, until big retail or big institutional players are coming into the space, I cannot see why the price of Bitcoin would surge the way that it would, or way that people are expecting it to, right? I don't see that happening. Now, there are a couple of positives, though. We have seen a shrinkage of supply on exchanges. This does mean that we are probably going to see some pretty interesting spikes at times to the upside as that demand slightly increases. It's a careful balance between supply and demand. And if the demand does increase too much, then we could see a pretty significant spike. I'm not saying that that can't happen, but to think that a bottom is in just yet, I think, is not really the correct way of thinking of this. This is not your typical kind of bear market situation, and Bitcoin here is rewriting its history here. So just kind of keep these things in mind, that essentially we've seen this already twice. This could be the third time that we have a very similar situation. So just be really cautious until we start to see those retail investors selling. I'm not going to be getting too carried away when it comes to the price action of BTC. I'm going to leave this video right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not subscribe to stay up to date with all the videos. Join us down in Discord, and we'll catch you all in the next one.